Hey, it's December 11th, 8:43 p.m. Just a really quick opportunity I saw in the market before I was about to wrap up, so I figured I'd throw it on, risking 4 pips on this. Let's see. Yes, about 4 pips. Looking to shoot back up into these mid-range, about 14, 15 pips, so a nice little risk to reward. I can walk you guys through my thought process really quick. Assuming this trade holds, it looks like it's a little bit lethargic. But anyways, just a thought process. So if we look at the 1 minute, in the last trade when we exited, I was watching this really closely, and one thing I noticed was that we had this spike down. We had this. Actually, let me use this chart over here. It's a little bit. It's already marked off, so a little bit easier to describe what I'm saying. Anyways, we had this this quick push up here past this level of what was resistance. Price spiked back down, indicating that there may have been some selling interest, and right after that we had some increased buying again, which was kind of a surprise to me. I wasn't expecting that, but again, we did have the risk management in play, and that took our stop out. So we exited both our positions, and then price spiked back lower. Now, one thing that, regardless of what a 5-minute chart tells you, looking at a 5-minute chart, you can see there's some increased selling pressure here. On a 15-minute, there's also some bearish price action. But on the hourly, you have a bullish bar. So, the higher time frames will always hold more weight. And so, it's important to remember that any sort of price action that occurs within the body of this bar should be considered bullish. Any sort of price action below the wick of this bar is considered bearish, right? Just to simplify things. So, what do we have? Well, we know that we should be looking for bull setups because that's what the hourly is telling us. And the hourly again holds a good amount of weight. But if we look at a little bit of a larger time frame, what we can see is this swing point actually comes off of this swing point right here, right? You see those line up. So we not only just have a reversal bar sitting in midair, it actually happens to be at a prior level of support. It might be minor support, but it is still relevant. So looking at at the 1 minute chart again, you can see we are kind of basing here, and anybody who's looking at the 5-minute or 15-minute would have kind of jumped the gun and got short, right? But the guys who actually push this price up are not losing anything on their trade until price trades below this level right here. That's the reason I have that marked off. So one thing you'll notice is price came back down to this level, but they're still defending their long positions. And as you can see, there was some renewed buying interest here. So what I did was I put a limit order out here to get long on a retest of this support, and I got filled on that, and then my stop is just below this candle, which is renewed buying interest. So, like we talked about, my stop is very tight with the spread and all. It's about 4 pips, but I do think with the hourly candle, if we're able to squeeze into a move, that offers for a very good risk to reward. And and the upside could potentially pay, some multiple of our risk. So again, on the minute chart, we're still seeing a good amount of momentum on the upside candles, and the downside candles are sort of dwarfed by that so far, right? Again, it is important to remember that we do have another channel here, just like this one. This pattern is obviously not as tight as this one was, and we also have that hourly candle in conjunction to to sort of, I guess it's not the same. It's not the exact same trade as this was. There's other factors that play into account that we just spoke about. So that's pretty much what I'm looking at, and I won't be around to update on the end of this, but probably my next video, whenever that is, I'll wrap it up and see how things went on this trade.